Hey guys, it's Rod Moser with NextHome Navigator. A couple of weeks ago, I did a quick video on a local company called Homey that was laying off a third of its staff, really struggling in the real estate market today. Oddly enough, we're in a really hot housing market. So to see a company that's really struggling and down 50% year over year in their business model and now having to lay off business was kind of a little bit of a surprise. Came across another article this week that I wanted to share with you really quick. Let me jump over into that. This article, you can Google Wolf Street, and this is a writer by the name of Wolf Richter, an investor. He writes a lot of articles on investing, but he's talking about the collapse of the real estate tech IPO and SPAC stocks. House flippers Opendoor and Redfin come unglued after Zillow. So in the article, he's going to talk a little bit about these companies and a couple of others. And I wanted to just read a couple of things about what's going on with these companies. So Opendoor on Thursday evening reported a loss of $191 million for Q4. By the way, this was written February 26th of 2022, so about a week ago. This brought its net loss for the year to $662 million, which brought its total losses for the 4 years that have been publicly disclosed to $1.5 billion. So this is a company that's lost $1.5 billion over the last 4 years. Most of that money came from investors that had invested in the IPO. Down here, it talks about this is just another chapter as it just keeps getting worse. On Friday, shares closed at $8.44, down 78% from the February 2021 peak and 73% below, excuse me, its IPO price. So this is what that looks like. The article was written about a week ago, so I Googled this information. You can Google open share price. I looked at it over the last 6 months, and this kind of gives you a little bit of an idea of what's happening. Interestingly enough, so these guys purchased almost 37,000 houses in 2021, but only sold 21,725 houses. That left them with over 17,000 houses in unsold inventory. All right, a couple of things to talk about really quick. Guys, over the last few years, one of the biggest pieces of news in the real estate industry is how we have such a lack of inventory. We don't have any homes. Part of the reason for that is we have investors like Opendoor, like Zillow, like Redfin that have been out there trying to flip properties. They'll go out and purchase, in this case, almost 37,000 houses in 1 year, taking all those homes off the inventory and away from people that are interested in buying a home, living in the community, sharing it with their families. They're buying these houses, they're losing money, and they're still carrying inventory. Interesting. Well, now their stock price is collapsing, their business model isn't working. This is on the heels of a lot of companies who are running into the same problem. Okay, let's jump into the next one really quick. Redfin, originally an online real estate broker. They jumped into the house flipping craze in 2020, and its shares rocketed amid endless hoopla by the crazed crowd of stock jockeys and hit a high of $98.44 per share in February 2021. The shares began their long collapse. On Friday, they closed at $21.83, having collapsed 78% in 1 year. And they're now below where they'd been after the first day of trading following its IPO in July of 2017. Okay. If you followed me for a little while, you can go back and look at some of the information that I've given you on Redfin. Redfin actually opened up 15 or 16 years ago. And in that 15-year period, not one time did they post a profit. Not one time was the company profitable, yet they were selling shares and they were using investor money to be able to prop up their business and keep it afloat, even though they never proved that they could actually make money in the real estate game. Now they jumped into the property flipping, which was an idea to be able to go in and purchase people's homes at a lower price and then turn around and sell those homes to the public for a higher price, yet they still are losing money, and now their stock is collapsing and their model didn't work. Their hope to be able to turn a profit was to jump into house flipping, basically to steal the equity of people and use that equity to turn a profit in their company. Again, guys, it didn't work. By the way, I also Googled the Redfin share price, and here's what it looks like over the last 6 months, down to $20.84 today. Okay, Zillow. Zillow did have a brief respite in its collapse when it announced on February 10th that it lost $881 million in 2021 on its home flipping escapade, which came unglued in November when it disclosed that it would lay off 25% of its staff and get out of the house flipping business and dump the 7,000 homes it had bought. Later, it disclosed that it had sold most of these houses to institutional investors rather than to people who might have wanted to live in them. Again, guys, this is not great that these companies were stealing inventory in an already light inventory market to create value and basically peel the money off the backs of the average Joe that was just trying to buy a house and live in it. On Friday, shares closed at $57.95, down 73% from their high a year ago and about level with where they'd been in February of 2020 before the crash. Oh, by the way, let's take a look at Zillow. What's happened over the last 6 months? Again, not great. The business model really isn't working. Okay, let's look at Compass, which is another real estate company IPO. Compass is a tech company. It's a real estate brokerage tech company reinventing the space. It's one of those examples when you realize something is seriously wrong with Wall Street. But okay, people have fun with their trading apps, and if they get cleaned out, so be it. Compass grew by using SoftBank's money, another investor's money, and the money of investors to buy up real estate brokerages around the country. Over the 5 years of publicly disclosed financial statements, Compass has lost $1.44 billion. How can a real estate broker in the red hottest, no questions asked housing market lose $1.44 billion? All right, and then it goes in and shows what's happened to their share price. Let's take a look at Compass. And again, not an awesome trend line.
All right, guys, a lot of interesting information on how companies are being impacted right now with everything that's going on and with the changes in the real estate industry. Stay tuned, and we'll make sure that as we get additional information, we'll keep an eye on these companies as well as others and how it might impact the real estate field in general. We appreciate you watching.